There we go. All right. Hey, everybody. How's it going? Almost 9 o'clock here. Let's go over to the metals market. Let's get over to the metals market. Let's go over all the metals, being that has opened already. And I think today, market sentiments to the downside. We do have gold in our supply zone scanner. We've got copper and platinum in the demand zone scanner. Now, gold is still, look at that. Boy, oh boy. What did I tell you guys last week? There we go. Still in that sideways movement, isn't it? And we have entered that demand zone on that 4-hour chart there. So, it's one of those things where, look, you can take a small risk. You can take a small risk on this sideways movement. You'll never know when this thing is going to break through, so the only thing you can do is take a small risk. Where's that ADR checkpoint? Okay, today the ADR checkpoint, first one is right down here. Now, if it does break through this demand zone and hit that ADR checkpoint, hey, Graham, how are you? Good to see you, buddy. If it does break through that ADR, if it does break through that demand zone and hit this ADR checkpoint, most likely will sort of just flutter back and forth and stay within this range here. And we have to start looking for more of a downward move, right? Because we would be early in this 4-hour trend. And what happens is in these sideways movements, just like in the Australian dollar, right? The Australian dollar, we saw this in, and what did it do, right? What did it do on the Australian dollar? It broke through, right? And we got ready to go short in a zone that was right, where the breakthrough took place, which means previous support, right? All these are support levels, right? Support, 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 and support. So we were hoping at the breakout. Hey, Frank, good to see you. We were hoping that at the breakout, we were going to get some sort of pullback into a zone that was right up in here for the move down, right? That is the logical thing to do. But the Australian dollar didn't want to do that, right? It broke through that zone, came back up into here, into this supply zone area, and then made a huge move all the way down. So that is something that could happen. So what in setting this trade up, what you need to do is you've got to take both. You've got to take both. You've got to respect the fact that we broke out to the downside. And you have to take that zone because every trade is different. We're getting an alert here, an up arrow alert on the Russell. We'll go over there and check that out, see what's going on. But you've got to respect the fact that the structure was broken, and we did pull back into this, this previous level of support, and it should become resistance. If it fails, then you've got to look for the next move, which is back up in here. And this is actually the better area, right? Because you have more, right? You've got more room to the downside, right? You've got more room to the downside there. So, so we could wait for that. We could wait for that and see what the heck is going on. So those are two moves. The other move is to take a small risk here, back up into this area, right? Pull back, impulse up, didn't quite, it just broke through some structure here, right? Then it came back down, went sideways. So maybe we want to go a little bit deeper here for that reversal. So being that we're in this demand zone, what you would do is you drop down to that 15 or even that 5-minute chart. Look how wide that demand zone is. Look how wide that demand zone is on the lower time frame, right? On the 5-minute chart, it's even wider, right? So what would we look for on the lowest time frame here? Well, we'd look for something like this, right? Some impulse out. We cross above that 50. Find some kind of support for the move out, right? We can try to get in early somewhere in here. But when we start to see the very first break of structure, right? When we start to see the very first break of structure, that's when we want to start paying attention for patterns, right? This is always the pattern that you look for when you're looking for those supply and demand zones, right? And then on this pullback here, there would be some other kind of demand zone waiting for you here somewhere for the next move up, right? And usually you get three impulses out of that, right? Here's the first impulse right here. 1, 2, 3, right? That's usually called, let's just exaggerate it here, right? 1, 2, 3. That's called a 3 drives pattern. You get these 3 impulse moves. And if you count the waves, 1, 2, 3, 4, 5. That's where those 5 waves come into play, right? So if you have more than that, you're really extended. 6, 7. Now you're super extended here. You've got 1, 2, 3, 4 impulse moves to the upside. So it's just another way of counting, just another way of counting these waves. Let's get rid of all that. And it's super powerful. It's used in Elliott wave. I definitely incorporate that into everything that I do because it just lets you know where you are on the map, right? So right in here, we came in, right? We did make a nice move out, and it decided to come back in, right? What's it look like on the 15-minute? 15 minutes still in that downtrend. We didn't quite hit here, and right here we hit and we made a nice move, right? What did we do on the 15-minute? Right here, pulled back, and right there's your break of structure. In this case, it pulled back deep again, broke through all this structure. So we're back to, price action is back to the downside now. We are back to the downside, waiting for some type of pattern again. So sometimes the pattern can fail, right? It doesn't work every single time, but it definitely gives you direction of price. That's what it definitely does. Gives you direction of price. Okay, so let's see here. We're still forming the opening range on crude oil. So let's stick with the metals and let's just go over all the metals here. Sideways movement on gold, downtrend, momentum is down. Where's our opening range? Right here. So, so the opening range, right? 15-minute opening range breaks out to the downside. That makes sense, right? That makes sense that we broke out to the downside because, I mean, we're in a downtrend, even though it's sideways. We're in this sideways movement. It's still a downtrend, and momentum is on our side, right? Momentum's on our side. Hey, Mariana, good to see you. Good morning. So it makes sense, right? It makes sense that we're breaking out to the downside right here. Now, we're breaking out to the downside right inside of a demand zone, right? So this would be such a perfect setup if we weren't, if we weren't in this demand zone where all these buyers are hanging out, right? So for on the retest, if you go for the retest on this opening range, here's what could happen, right? Right, something like that. But you'll never know. You'll never know. It's just important to realize that. So what do? Well, you can take a small chance, right? Kazi, good morning. Kazi is back. Back from the retake. You took a recourse, right? You did a course again over at OTA. We were all wondering where Kazi went. Yeah, so that's what we've got going on here. So you would just have to core strategy retake. That's what I was trying to say. I haven't finished all of my my tea here. Core strategy, yeah, always good to retake core strategy. So we've got this breakout to the downside, and we're breaking down into a level of major support here. In fact, what do we have any moving averages? The 100 or the 200 on that high time frame? It's above us. Okay, so even the major moving averages, the 200 right here, that's the red one, the red line, and the gold line, okay, is the 100. Simple. And we use that on the highest time frame as major levels of support and resistance. And you can see price came up and didn't want to cross that 200 simple moving average, and it broke back down. So we do have that we need to get through as well. But trend and momentum are to the downside. So what would it cost us? What would it cost us? All right, it's very cheap, right? It's very cheap to take a couple of contracts here for like $100 right here. If we do get this pullback, where are the ADR checkpoints? Nowhere to be found, right? ADR checkpoints are also, wow, way down here, okay? So we've got a lot of movement. So we might break through all of this. You can only trade what you see, right? Trend is down. If this fails, what do you think is going to happen? It's probably going to start moving back up to here, in which case we'll just go long. Okay, but as of right now, the big picture, the only thing we have against us is that major curve level, right? So we could choose to short this right into the curve and hope that trend and momentum stay on our side. That's it. We don't know what's going to, you'll never know what's going to work or what's going to fail, right? You don't know. You can only trade what you see. And that's what we're going to do. We're just going to trade what we see. Okay. Let's go and see about copper. Okay. Copper has broken through some major levels here. Let's go out and see what we boxed out here. Oh, I see. Okay. So drop base rally, right? We broke through that. You can get rid of that. And we're heading towards this, this other drop base rally down here on the 4-hour chart. All right. So we're heading there. Get rid of this. Okay. Pulling back into the trend cloud. What's the next move, right? Pulls back into the trend cloud, makes the move back down. That's the expected price action movement. And we can expect that because we're looking at trend cloud, right? Pulls back into the trend cloud, impulse down. Pulls back into the trend cloud, impulse down. That's what price likes to do. Let's get rid of that. Okay, so we've got that situation. Now, 1-hour chart, trend has become extended and we're breaking above. Okay, so we've closed above that 50 simple and we are recalculating. So this would be a fresh trend on the 1-hour chart to the downside. How do we know when this thing is going to start to turn around? Well, you can start looking at that cycle indicator. Cycle indicator is red. Okay. So we should be looking for some kind of move down. So the question is this going to break back below the 50 simple here? What did it do? Broke out to the upside in a downtrend, right? Momentum has shifted, but we came up here and we hit this previous day's open and we're staying under the previous day's high. All right, so this is kind of looking like a bull trap, isn't it? And if we look left, we've got all this structure here. Here's where all of the sellers came in. All right, and we can drag this down to the previous day's open. So, I drew this supply zone by using structure and also using those resistance levels as a guide, right? Previous day's open, previous day's high. And what is this? It's like, and that's really far out. That's something else. Previous month's low. Previous month's low. Okay. Whole bunch of resistance there inside of a supply zone. And look at the reaction we're getting off of it. What can we wait for? If this holds, why don't we just wait for this, right? Let's wait for the break of structure on the opening range. Take the retest of that. Now we're in business, right? Now we're in business. So that's the example of when to wait. It's just putting in the right pieces at the right time. If you know how price moves, you'll be able to predict these patterns. You'll be able to use these patterns and predict what's going to work. And when you see something like this, you're like, oh man, why didn't I just take it there? Well, you didn't know. And momentum is against you, right? So momentum is to the upside. And we're starting to break above the 50 here, right? We're cycling up. Momentum is up in this downtrend. So when you're cycling up, it means you're correcting. So this is a corrective move. Okay, this is a corrective move on the high time frame back into your trend cloud with momentum on your side. Okay, you even have bullish divergence here, right? This price came down, pulled back, went even further, but it went down further with upward momentum. And that's why this line is drawn here like that. See, it says bull right there, bullish divergence. Price comes down, right? Actually, right here. Price comes down right here. And looks like we got into that gold trade. Sell order. What did we do? So yeah, so that is what happened there. So pulled back, hit that supply zone, and we are reacting off of it. What did we? Oh no. Oh no. Okay. Well. Oh boy. All right. This obviously this is an example of what not to do. Right. We were demonstrating on the full contract the difference in price. Okay, and we forgot to take it off. So whatever. We'll just leave it alone. We're below structure there. We were showing an example of how on the full contract what it would cost and what it would cost on the lower on the micro contract, and we were looking at the difference there. All right. Well, we'll see how that goes. If we had $1 million in the bank there, that'd be a trade you can take. But until that day comes, we'll just use that as an example. Okay. So yeah. So we are pulling back into that demand zone. So is it going to reverse and go back up? Right. Back up to here. It did before. It did it here. It did it here. So we'll see if it does it again. Once it reaches back up here, we'll have momentum and trend on our side to go short. Oop, hold on 1 second, guys. All right. Okay, guys. So we've got some maintenance going on here. Okay, so hang tight. Okay. All right. So let's take a look. Let's go over to copper. I'm coming back. Sure. No problem, Fernando. All right. Maintenance is here. Maintenance is here. The garbage disposal is not working. So let's see. Okay. So now let's go over to copper and take a look. So copper broke out, hit that supply zone, and now we are starting to head back down. Okay. So we're not really sure what's going to happen here. We need to see some break. We need to see some structure break first before we can actually get into this trade. So we'll put that on the back burner. Silver. Okay. Silver breaking to the upside, hitting that 200 moving average, and now starting to fall back down. Hitting the, wow, look at that. Came up, hit the very first ADR level, broke back down, second ADR level hit. Okay. So it went to the upside, first ADR, back to the downside. Okay. This is, you will never get a good fix on this to take a trade. Okay, you'll never know what's going to happen here. But look at that breakout. Look at that breakout to the downside on silver. No telling what this thing is going to do. Whips to the upside, whips to the downside. We've got to let this thing. We've just got to leave that alone and let it do what it's going to do. Platinum. Okay. Very wide opening range on platinum. Breaks to the upside, and now we're starting to break back down. Downtrend, right? Pseudo downtrend, right? Starting to cycle down. We just don't have momentum on our side, right? So we've got a downtrend with upward momentum. And whenever you see that, whenever you see a downtrend with upward momentum, all that force to the upside, that's a mixed signal. It's just a mixed signal. And what tends to happen with mixed signals? Well, you tend to get whipsaw, right? You tend to get whipsaw. And so it's very easy to kind of just walk away from that. We need momentum and trend on our side, right? And how are we going to see that? Well, we're starting to break back down, starting to cycle back down. We need to see a break below that negative 100 on CCI to start looking for legitimate trades. Maybe we'll get that here on the 15-minute chart. It breaks down. We break below negative 100. Now you can start looking for that retest for the move down to continue with these downtrends. It's as simple as that. Okay. I can't believe that. That's hilarious. All right. So let's go take a look now at crude oil. All right. We should have, let's get rid of all this. Crude oil. We'll start looking at everything on crude oil. Opening range. Okay. Crude oil is back up into that area. That $75 mark. 7 waves up. 7 waves up on the 1-hour chart. Candles become blue. Trend is extended. What does it do? Breaks below 50. Get another alert on the Russell. Breaks below 50. Recalculates, right? So we've recalculated, and now we're starting to move back up. Momentum is against us, though. We are cycling up. We did break to the upside. So will this trend continue? That's what we want to try and figure out. Will it continue up? What happened? Uh-oh. Oh,
that's your dishwasher.
Is it?
I think, yes, it's full.
Oh no.
Dishwasher could not train.
Oh,
you used it today?
I did yesterday.
Oh, right. I got it.
Oh man.
Leave it first. Remove the clock here.
Okay.
Drain down and come and clean.
All right.
Do you have any dirty towels?
Yeah, let me grab a towel. Hold on, guys. All right, sorry guys. We got a little bit of a flood here at the Giuliano household. Oh man. Okay. Let's see here. All right. Um, so on crude oil here, again, we don't know what's going to happen. So we're breaking to the upside. If we pull back into this opening range, we won't have momentum on our side, right? And we really want to have that. We've got the 1 hour trend. We're cycling up, and look at this move. I mean, you can see it happening right now. Just ripping to the upside here. There's just not enough evidence for us to say, oh yeah, it's going to pull back and everything's going to be fine. There's not enough evidence. We need trend and momentum on our side to take this. Let's go over to natural gas. Okay. Interesting. 4 hour and 1 hour chart. Extended to the downside here. 4 hour, 1 hour chart completely extended. Let's go out and try to find, let's see, go out to the daily. And we're pretty much at an all-time low. There's nothing back there. There's a dinosaur. There's a dinosaur here. There is nothing back there. So natural gas is at an all-time low. All-time low. Go back to the 4 hour chart. So if we're at an all-time low, where's that ADR checkpoint? Right here. All right. 5 minute broke to the upside, and looks like it pulled back into this area right here. Not quite, right? But it is trying to break back to the downside. It's trying to break to the downside. Trend is on our side. Momentum on the 1 hour chart's on our side. But we are running out of steam, right? We are already running into that seventh wave. So perhaps it makes one more move down. I don't know. Just trying to plan this out. If it pulls down and hits that ADR level on an extended trend, we really need to start looking for any sign of trend reversal here. Any sign of trend reversal. And that means watching that 5 minute chart, right? We want to watch that 5 minute chart. Look how far away that ADR level is. Look at that ADR checkpoint. That's a long way. I mean, there's plenty of money to be made there. What's the safer play? I doubt it's going to go from here all the way down to here, in a matter of minutes. But this thing is plummeting. So I think if we get a breakdown, right, and we break through some structure here, we can start looking for a pullback all the way down to here. But I think we might just start seeing this thing go sideways. So there's really, again, there's not enough there. If we were down here already, if price was down here at that ADR checkpoint, I would say, hey, let's take a chance, because we've got an extended trend and we know that this thing is going to want to reverse at some point, right? It's going to want to reverse. And we're starting to get, it looks like it's bottoming out here. it's bottoming out here, and that 1 hour chart might want to break above, recalculate, and then continue down. There's just too many ifs, too many variables, too many variables. I got a flood in my kitchen right now. The kitchen is flooded. Okay. How's our goal doing? Oh my God, we're making money on the full contract of gold. Holy cow. Look at that risk. It's a 1420 risk, right? Over $1,000 risk. And we basically took the supply zone of that area, or the demand zone, and we're playing the range here, right? So it's much more expensive than the micro, right? Much more expensive than the micro. Okay. Pulling back into that demand zone. Does it go all the way back up to here? We don't know. We don't know. Momentum's on our side to the downside. So if we do pull back into that opening range, we could go short. What's going on with the Russell? We keep getting signals on the Russell. Opening range, 15-minute chart. It's still forming, right? We are still forming. Uptrend, upward momentum, uptrend, but extended, right? So we could get some deep pullback here. But as of right now, we're looking for some kind of breakout to the upside to take this thing long. We do have signals here. TrendCloud signals, 6:30 a.m., another one forming right now, and they seem to be working out, right? These signals are working out because we're in alignment with momentum and trend. We're in alignment with momentum and trend, and that's when those lower time frame signals will work out for you. Okay. Also working on, I'm working on the automation, guys. I'm working on the automation of TrendCloud. I'm doing it right here as a strategy, and I am testing out the strategy here. And I'm making little tweaks to it. You can see here on this particular one with the micro S&P, which it seems to work out profitably the best on the S&P. You can see after a year, right? And I started with very little. If you go here, I only started with $2,000, okay? Taking 2 contracts on the micro S&P. And we are looking at a 1.5, right? A 1 to 1.5, not quite 2 to 1. And it's, if you just let it go, if you just let this particular bot go, at the end of the year, you had 129% increase in profit. Here's the performance. Started with $2,000, and if you just let this thing go and not even touch it, your gross profit here, your net profit here, was in the green. You are in the green here, so over $2,000 profit. So you made 129% of your money by doing nothing. So that is a good sign. And you can see in the overview, the chart, right? You only had slight periods of drawdown here, but look at that profit increase, right? As long as you are in the green, the drawdown is definitely there, a little over 20%. Okay, so meaning at some point in time, you were down 20%. And, you know, you have to look at this and you got to say to yourself, okay, well, if I took $2,000 and put it into my account and I just let this TrendCloud bot run, then it would, at some point, I don't know when, but at some point you'd be down 20%. Okay. But if you leave it alone, because remember, we make money after a series of trades. If you leave it alone, and I put in, I went back 1 year. Let's see. Here. So from January 1st, 2022 until today. Okay. February 12th, 2024. There you go. Without lifting a finger. So this is literally something that you would take and say, hey, I got $1,000 or I got $2,000. I wouldn't start with less than $2,000, to be honest with you, with these bots. And you just put that into an account and you just let it go and leave it alone. At the end of the year, okay, you didn't lift a finger and you made 129%. So we're almost there. I'm still tweaking it. I want it perfect. I'm going to get. I'm going to talk to a few more people, see if we can tweak this thing. But you can see there are the trades. Here's a list of the trades. It does everything for you. Okay. This had 5 contracts, so you can see the wins and losses here. I'm not really sure how all of this works, but you can see, I guess the white is the white. They should make the numbers green. That would be a lot easier. So these these white numbers are, you know, the wins. Yeah, it's pretty amazing and exciting. Yeah, it's working. It's working. And I am noticing that it is working best on, as far as the bot goes, it is working best on the micro S&P because of the volume. So it might be that we take TrendCloud and we specialize it for the micro S&P only. And we say, okay, here's the TrendCloud trading bot. It works best on the S&P. Do not use it on anything else other than the micro S&P as far as an automated trading system goes. So this is huge, guys. This is huge. You know, so I mean, the numbers don't lie. I mean, that's look at that. I love looking at that thing, man. I mean, look at that curve. Taking $2,000, putting it in, and now leave it for 10 years, 5 years, whatever. I mean, you know, you're not lifting a finger. You're just turning this thing on. And after 1 year, 129%, we're on to something. We're on to something. So we're going to continue to do that. I still can't program a trailing stop, but there is a company that I'm speaking with that says they can do that. Okay, because you got to remember, this number is only taking targets at a 1.5 to 1, right? This is 1.5 to 1 ratio only. No trailing stop. This is all in, all out at 1.5 to 1. So all in, all out. This does not include trailing stops. It's very difficult to automate that. I want to be able to automate it so that we can scale out of the position. Take that first contract off at a, 2 to 1 or 1.5 to 1, and then let the other contract go as much as possible. Yes. Yeah, this is auto buying and selling. That's right, Graham. Automated buying and selling. This is a trading bot that will, and this is See, long target hit. Here's the long entry. Here's the target hit. Okay. So yeah, it will go long and short. This is going long and short. And there's your TrendCloud works, baby. It works. That automated system is working. Beautiful curve up. So it would be really nice to turn this thing on and just let it work 24/7. That's the goal, right? That's the goal. We'll get there. We're getting there. We're getting there. Very exciting stuff. Because now it's kind of like buying real estate, right? You buy a house, first of all, if you buy a house, you need at least you need a lot of money, to buy a rental property, right? This is an opportunity where you can take $2,000, put it into an account, leave it alone, and just let TrendCloud bot run. And even though 46.7% accurate or profitable, hey, so what? Even if it was 25% profitable, right? You can still make money because of those swings, but you got to be able to scale out of that position. So I'm going to have some more conversations and see if we can make that happen. Until then, we are left to our discretionary trading. So we're getting there. We are getting there. But that's huge. That is huge. Okay. Micro Russell extended, and we've got this upward trend. So we really need to be taking a shot at this thing to the upside, right? If we pull back into here, right? That is definitely a demand zone. Right in here, definitely a demand zone in an uptrend. What's that going to cost us? Here we go. We can set that up right now. Okay, if we retest this area, we are below structure here. Should we go here and use the candlesticks for structure? Why not? We are under structure here on that 15-minute chart. And we are protected by the previous day's close. All right. So it's kind of like we've got this demand zone and we've got this demand zone here. We're protected by both. If it works, great. If not, well, then we might miss it. Okay, so there you go. There's the trade. Even though we're extended, right? Even though we're extended, we've got a ton of momentum on our side, and this thing on the high time frame just ripped to the upside. All right. I'm so curious to see how gold is. Oh, come on, gold. Oh, good grief. Okay. The Dow. Okay, what's going on with the Dow here? Uptrend on the high time frame, cycling up, momentum's on our side, and we are just starting the uptrend, right? We're almost there. We're breaking out, and we are almost above. same thing, right? We've got that demand zone right down here. Got that demand zone down here. We are breaking out to the upside. If the retest takes place, it's going to be somewhere in here. Okay. First demand zone, second demand zone, $110 risk. Why not? We shall see what happens. NASDAQ, NQ, micro NASDAQ, micro NASDAQ. Well, that looks like a double top, doesn't it? That looks like a double top. Waiting on that trend reversal. Cycling down, momentum is down. Grab that Fibonacci retracement. Swing high to swing low. And it is almost, well, actually did, didn't it? We need to see that CCI break below negative 100. And then we can start looking for those supply zones. There we go. All right. Let's get rid of that. Okay. So what's this going to do? Breaks to the upside, hits this bull trap, and starts to break. We broke through structure here. And looks like a lot of buyers are coming in here as well from the last time. This rally-based rally right here. Right, we've got a rally-based rally. That looks like a real nice setup for some sideways movement, doesn't it? So I would leave that alone. Uptrend, uptrend, momentum is up. And we haven't broken out to the upside yet. That's too bad, right? This would be a lot easier to make a decision if we could break to the upside and be early in this trend, but we're late in the trend and it's extended, and therefore it might just run out of steam today. It might just run out of steam. Let's check the agriculture. Downtrend, high time frame. Upward momentum, right? Trying to break to the upside. Look at how soybeans just moves in general. Let's just take a look at this. Right? Impulses down with these deep pullbacks, right? These deep corrective moves. Breakdown, deep corrective. Breakdown, deep corrective. Staying underneath the trend cloud, though. Right? So we're in this corrective move. It seems to like to come right back up to the original, to that original point. Let's get rid of this. So always get an idea. Always get an idea of where the pullback takes place on. You can draw a nice trend line on here. Actually, right in here, right? It really likes this supply zone area. Right, so we've got that ascending triangle going on, right? Kind of like this. There you go. Right, what's going to happen here? When does that triangle break? Right? Goes right to that apex, breaks out, right into there, comes down, finds support for the move up. That's what we're waiting for, right? We're waiting for that pattern right there to form just enough where we can say, okay, this is what's going on. Now we can get a fix on this thing. Okay. All right, Kazi, have a good one. Good to see you, buddy. That's the pattern. So I used to like to draw this stuff out and, see if I can draw it out by hand, draw it out like this, like print this out, put it up on the wall and just look at it, because your eyes will remember that. The more you look at this stuff, the more your eyes will remember that shape and that pattern. And it will be sort of burned into your brain. And when you look at it, you'll see it right away. You'll just start to see this stuff more and more. And of course, if you have the trading bot, you won't have to do any of that, right? You just let that sucker go and it will make you some money. I'm telling you, that's pretty, the data is pretty exciting, guys. The data on that trading bot is pretty exciting because it's just like buying a piece of real estate. You put it into the account, you turn that on, and you leave it alone. And, it's way better than a savings account, I'll tell you that. So we're getting there. Let's see. Time is it? Couple of minutes left. Let's go over corn. What is going on with corn? Breakdown. Okay, so here we had that sideways movement, broke through that structure. And what did it do when it broke through? Broke through that demand zone, came back in. Previous support has become resistance, right? Support, 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 and breakthrough, right? Broke through, pulls back. Now this becomes resistance, 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 and the move down. That's on the 4-hour chart. 1-hour chart. Downtrend, downtrend. And momentum is down. Both time frames. Momentum is just starting to hook down, right? And 15-minute chart, we are just starting to head down to that ADR level, right? TAN. Oh, you're in. Graham is in TAN, that ETF. All right, let's take a look. Let's take a look at TAN. Do we have it up here? Let's add TAN. TAN. Here we are. Invesco. All right. Where'd it go? Where the heck did it go? There we go. Okay. Daily chart. 1 hour, right here. Wednesday, February 7th, got the crossover. That's your buy signal right there on the 1 hour chart. So back on the 7th, that was when to buy this. And boom. Just starting to break through that daily 50 simple. And look at that. Look at the daily 50 simple on this. It is turning green and we are moving to the upside. Cycling up, momentum is up, all time frames. 15-minute chart is giving you TrendCloud signal. Yeah, you've been getting TrendCloud signals from about a week ago, right? Let's let's just follow it real quick. Cycling up, momentum is up, cycling up, momentum is up. There you go. Clear for takeoff right there. TrendCloud signal right here, cycling up, momentum is up, small pullback right here. There's your signal, cycling up, TrendCloud signal, up, up, up. Boom, beautiful. Beautiful. Okay, Frank, I will see you next time. Thank you. Oh, and we're just hitting that ADR level. So we just hit. So the movement for today, Graham, on your Invesco product here is it probably moved about as much as it's going to move today. Next time, tomorrow's another day, right? But I think you got in at a great time. So good job, Graham. Good investment. Good investment. And this is where you got, this is where the crossover took place. So the crossover took place on the 7th, right around 11:30 a.m. And that would have been, that would have been your sort of your buying opportunity signal. And then you had all these signals here that were also lined up with that. Man, all these signals worked. Right here, it's on sale. On sale. Here's your crossover. And then finally, right here, crossover, buy, 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 buy. All your buy signals. Mariana is asking where you got in. So Mariana, on when we're looking at stocks, you take that TrendCloud and you put that TrendCloud on the 1 hour chart. And the 1 hour chart, because we're using, in this case, we're going to use TrendCloud for investing. Okay, so we don't want to short our stocks. We want to invest in the stocks. So if you you do your research on a stock and you say, you know what, I want to start accumulating this stock, then what you do is go to the 1 hour chart of that stock. In this case, it's TAN, it's TAN, and you start accumulating at the crossover on the 1 hour chart. Okay, and that is the best way for you to get in on these moves. All right. And that's what you would do. Like right here too, accumulate. This was a big move up. But you can use the TrendCloud as a guide for these upward movements on the 1 hour chart. 1 hour seems to work best for stocks with TrendCloud, but this is an accumulation point. That was it. So Graham, you got in around 44. Yep, right around here. Yeah, so that's it. That's in that same area, right? It's the same area. Here's the crossover, and that was around what 43.95. So you got in at 44. That's great. That's great. Now, if you have an M1 account, instead of buying 2 full shares, you can buy fractional shares if you wanted to. So you can buy a bunch of fractional shares to invest, okay, to invest everything. And that's it. That is it. All right, guys. Well, good job today, everybody. Good job. And I will see you tomorrow. I'm going to work on the bot here, see if we can tweak this, get it better. But it is working. It is working. All right, guys. Have a good one, everyone. I will see everybody tomorrow. Take care.